Thank you everyone for joining our ninth weekly recap. This is going over September 14th through the 18th. So I will begin by doing a summation of the market moving news. But first, like I said earlier, if you didn't catch it, Chris is not going to be with us today because he is on vacation. But nonetheless, I'll be here to conduct the interview and give you the recap. So thank you for joining us. So starting with Monday, stocks traded higher as acquisition deals and positive COVID-19 vaccine development news hit the market. So each index put up roughly 1 to 2%, nothing crazy. But then NVIDIA acquired a UK-based designer arm in a $40 billion deal. This will increase their artificial intelligence sector. And then Guild acquired Emu for 21 billion, and AZN is resuming vaccine trials. Heading into Tuesday, we had several economic reports. This includes import and export prices rising, the September Empire State Manufacturing increasing, and industrial production rose as well. Oil jumped in response to Hurricane Sally's supply interruptions, and overall a mixed day for the major indices on Tuesday. Heading into Wednesday was another mixed day for the market as Dow closed flat and the S&P and Nasdaq closed negative. This was due to positive housing data and then the Fed's leaving rates unchanged. So heading into Thursday, this was a negative day for the major indices. This was due to jobless claims reports reporting higher than expected and Congress still not reaching a deal on the stimulus package. Heading into Friday, so COVID-19 cases topped 30 million cases worldwide, adding on to further losses on the major indices. So the overall sentiment was a very choppy week as we continue into routish territory and maybe even bearish. So some technical analysis for next week and on the major indices. SPY broke EMA 50 on the daily, but closed above support at 330. Nasdaq broke the EMA 50 on the daily and closed below the lower trend line. But Dow is bouncing off support at 276. So definitely don't want to be biased, but things are starting to look bearish, but I don't see a major catalyst. I just think it's a sell-off after reaching all-time highs. So some major earnings, there wasn't many, but FedEx, they beat first quarter August 2020 earnings of 4.87 per share on revenue of 19.3 billion. And the estimate was 2.59 per share on revenue of 17.5 billion. Definitely a strong stock. It was looking very good on the daily, possible ER continuation. Another major earning was Adobe Systems, ADBE. They beat third quarter August 2020 earnings of 2.56 per share on revenue of 3.2 billion. And they beat the estimate of 3.2 billion. Heading into the interview, are you ready, Steve?
Yeah, I'm here.
All right. Appreciate you taking out the time to do this with us. You're very active in the voice channels and definitely a role model for many.
Let's go, Steve.
Yeah, can I get a round of applause? Get some love in the chat, please.
Wow, thanks. I don't even
Woo!
get that.
There we go. Yeah.
Team Steve.
If you have any questions for him, please type it in general chat and I will address them later in the interview.
Thank you.
So beginning, can you tell us a little bit about yourself for people who don't know and how you got started trading?
How far back do you want me to go?
All the way to the beginning.
I was born a little boy in Chicago. I'm originally from Chicago. University of Illinois graduate, degree in agriculture. Actually, it's in dairy science with a minor in ag finance. Yes, I am a boomer. Thank you, Jim. Or Juan. I like Jim. So anyway, that's my college background. I then went off to work for a company called EDS, where I was a programmer, team manager type of job, and I've done that for the most of my career. In 2000, I got involved in insurance and investments as a secondary. If anybody knows what Primerica is, I was involved with Primerica, and that's kind of what put me on my own educational path for learning about stocks and mutual funds back then. ETF trading, we couldn't, or not ETF, but options tradings, we couldn't do that back then. They didn't exist quite yet. And when they did exist, it was very, very expensive. Coming forward, when I started owning my own business, that's when E-Trade opened their doors, and I started trading stocks for myself, moved my mutual funds and investment funds over there, and became a stock picker. That's pretty much where I got my experience in the stock market itself. And I'll say I'm fairly lucky. I mean, a lot of my buying stock has to do with simple rules, looking for companies that have been around for a while. And even when new companies come on, when I'm doing speculation, I usually don't buy them until they've earned, they've moved up from the dollar stocks to the $10 or $20 stocks. Not that I haven't done the low end as well. Started trading options about 3 or 4 years ago. I was just doing a couple options a month, not on a regular basis, not daily. And then I got involved with Tasty Trade and Tasty Works. Those are the brokerage house and the station, the channel that kind of does what we do, but they do it more like a broadcast. And went to a couple of their training. We actually flew to Colorado for one of their training sessions too. Learned basically the mechanics of options. I just have not yet perfected the identifying target, the same thing that we all probably struggle through, finding a good play, knowing when to get in, knowing when to get out. But I'm getting much better at it. I came and joined this group in January, February timeframe, just before COVID, and it's been an interesting experience, and I'm enjoying it and getting a chance to help other people as well. That pretty much
Awesome.
brings you up to date.
Yeah, you hit some of my major questions. So if I repeat any that you've addressed, I do apologize.
That's
But
fine.
I know that it is hard to, switch from the mindset of more longer term holding and then hearing or going to the options, playing the momentum, when to enter, when to exit. And I liked how you were looking at the fundamentals of businesses, because I know we kind of overlook that in the short term and just play the news. But for the long term, you definitely want to take that into consideration.
That's probably one of my biggest holdbacks in some respects too.
Hmm. So, how long have you been trading overall? So, stocks, options, whatever it may be.
I started trading probably. I mean, I've always had some investments since I've been out of high school, essentially at college and so forth, because I worked for companies that allowed us, back in the 70s, before I was even old enough to work, they started with the investment programs that we kind of have today for retirement, where the company no longer pays anything for your retirement or they match up to 3%. So I've always been involved since I've been in the work world. But as far as trading through like a brokerage house, I really got involved probably around a little before 2000, a little before I moved to Florida, but in 2002, 2001, a little bit after the World Trade Center, I lost my job and eventually began to own this company that I am now. And so I started trading on a more regular basis. And so that would probably be where I really got active in watching my stocks every day, or not watching them in some cases.
Is there a trade, good or bad, that stands out to this day?
Um, I have lots of trades that stand out.
Always
Maybe
Um,
been.
some missed. Go
I
ahead.
was I was talking about them. Let's see. We'll talk about, rather than options, we'll talk about a couple of long stocks. Um, I don't know if you guys realize that Amazon isn't what it used to be, or isn't what it was when it began. So way back in the day, there were two companies that I was looking to buy stock in. One was Amazon, one was AOL.
Oh
And
no.
yeah, AOL was the recognized tech stock. Amazon was going up against Barnes and Noble, the bookstores. Um, and I'll get to that too, Darren, really. But in the meantime, so I bought AOL, and I'm not going to complain. I didn't make tons and tons of money on it, but if I had used about the same investment in Amazon, I probably would have retired about 2 years ago. The other big one that everybody now can appreciate is a company called Apple. I didn't get involved in Apple when it first came to the market because I was an anti-Apple person. I'm a Microsoft developer type, and But at one point, I finally said, you know what? I'm going to bite the bullet. I'm going to take the biggest amount of money I've ever invested in a single investment. And I bought 100 shares of Apple at about $80 a share. And unfortunately, this is another no retirement decision. Apple got up to $200, and I'm like, you know, $12,000 profit, that's pretty good. And so I sold it. And Apple, of course, went down. So I'm like, okay, great. I'll buy a little bit back in, but I already started investing some of the money in other stuff. So I couldn't get back into 100 shares. And Apple went back up to a little over 200 again, this time like 212, 215. I'm like, okay, based on the way stocks used to perform, that $200 to $300 mark was usually where the blue chips would split. So I figured I'll get out, sell it, and the blue chip, you know, eventually either Apple will come down or they'll finally split. When from there it went 200, 212, 225, 250, 300, 500, 700, 7-for-1 split. And once again, I missed an opportunity because I would have had 100 shares that split 7-for-1. And now they're worth what, about, well, they split again 4-for-1, but now, you know, at one point they were, you know, it was my Tesla chance, you know, so to speak. And I don't regret it, but it's just, you know, you make a decision to take a profit, and that's the hard part. We do that every day, trying to decide, do you take the profit or do you take the risk? And so I took the profit. So those are two standout trades. And then the new standout trade was the one that I did this week. It's the first time I've really called out a trade, kind of like a Clark style, you know, where you put it out there, call stock. And if people were following the GE trade that we put out, it was a 300% gainer on the same day or the second day that the trade was active.
Congrats.
Thanks.
And then we're getting some questions about the Facebook story.
Facebook story, IPO. And I had to think about that because I thought I had the IPO offering, but no, I didn't actually get into the offering. I was rejected from the offering. So I ended up putting in a standing order. And back when Facebook IPO'd, you could put a day order in on the, you know, like we do today, and it would sit forever. There was no guarantee of a 35-second or a 55-second transaction. And people found that out with Snowflake anyway. You put in an order for, you know, thinking you were, you know, at market and get it at 100, and you got it at 175. But in the meantime, where I got Facebook was right around, I want to say it was either 75 or 100, and it came back down to 75, or it was 75 and it went back down to 35 like the next day. It was almost cut in half the next day. And I'm like, and I won't use the language, but I'm like, what the hell did I do now? Well, this is the first time I've ever been in buying an IPO. And so I did what most people do when you lose half your money on day 2 and you've never done it before. I sold.
I'm out.
You know, you laugh at it and you look at history. And now I don't FOMO over IPOs because there's an ETF that basically invests in first offerings. So I get the benefit of not having to worry about, you know, especially technology and stuff. It's not a tech stock. It's literally an IPO based ETF. And I will try and put the ticker symbol out there and some information about it. And at least I get I know that if they're playing right, I'm at least getting a shot at some of these new stocks as they come up. So that's how I got away from a little bit of the FOMO. I still have it, don't get me wrong.
Yeah,
Right
it's a
now I'm
hard one.
investing in a bunch of the SPACs, but I'm not doing 100 shares. I'm doing 10, and then I add another 10 or 50 depending on the cost. So I'm in a bunch of the different SPACs, and I talk about them in the chat in different places.
Tell us about your biggest success.
My biggest success.
The best trade you made.
Well, my biggest success are my children, even though they kill me sometimes. But you know, and the fact that I'm married 37 years or something like that, I'd have to ask my wife to be sure.
Congrats.
If you want to die, ask your wife.
No, she understands that I don't remember dates and stuff very well. I can tell you about the computer I worked on for you 10 years ago, but I often can't remember your name.
Mm-hmm.
But anyway, I guess the way to talk about it, and this addresses whoever made the comment about that I probably am still holding everything. Yeah, there's a lot of truth to that. I am a true believer in, or I was, in long and hold. Take it long and then hold it. So I will just put a couple of stock names out there and we can talk about them. But a company called AMD, a company called Microsoft, a company called um, Intel, and a couple of new players. They're not that long of holds, Square and Ring. And I don't have a lot of shares of each one of them, with the exception of AMD. And then I can explain on each one. But AMD, my average price on them is around $6 or $7.
Wow.
So I guess you would call that a success.
That's pretty good. Catching AMD at 7.
Yeah, well, it wasn't catching it at 7. Who knew it would ever make it to 20? And then if you look
Mhm.
at the chart, look how long I had to hold it till it finally made money. And in the case of Microsoft, I sold some of it off. At some point, I had enough profit and said, okay, I'll take my money back and let it ride. Now I don't really. I mean, I don't get me wrong. When Microsoft is equal to $10,000 or $12,000 in your account, you don't want to say goodbye to it because it goes to zero. But I have that kind of an attitude to a certain degree because I don't want to touch it. So that's another example. And then Intel isn't one of the best successes in that group, but I was in Intel, and I want to say probably at 20, 20 around $20. I'd have to look it up, maybe $20 if even. And I've sold off shares of that to make myself whole, so that I'm just carrying what I earned in the market on those as the initial expense into them. So those would be probably my biggest successes on the long hold. Um, Square and Ring and PayPal were kind of interesting ones. Ring is a company that I sell their product, and I've been following them obviously for years, but I was kind of chicken to buy into them. So I passed on an opportunity to buy some stock around 7 or 12. They got into the 20s. I'm like, okay, they're going to stay there for a while. Finally, at 35, I went ahead and put money down on it, and I bought 100 shares of Ring. And if you look today, you'll see where Ring is. I think it's into the 260s right now. It's coming
Wow.
down, and it hurts when those come down. PayPal, it was a Kramer not play, so to speak. A lot of times Kramer says on CNBC, don't play a stock just because they're splitting. Well, I decided that I wanted eBay just because they were splitting, and that's where PayPal came from. And so I got into PayPal, and because PayPal, that's in my retirement account, PayPal was making some headway. There was this little company who I also used their product called Square. And if you understand, there's a theme here, and I call them a little company or a little product. It's because one of the things is it's not so much whether the company is fundamentally sound that it is. It's whether I think their products have stay power, like involved in some of them. And so I bought both Square and PayPal around the same time. One was a split, the other one was an outright buy. And PayPal I shed during the drop during COVID, just to give myself some cash in the account. And yes, I do regret it, but at the same time, it gave me some buying power when I needed it
Mhm.
because there were some opportunities.
Definitely. So you addressed this earlier, but what brokerage are you using?
I use mostly E-Trade, and I know that that's opposite of what most of you guys, because you love toss, and I'm frustrated a little bit with E-Trade's. Their older screens, which are the ones that look more like the toss screens. Their newer interface for doing the trading is kind of a nice interface, and then the other one is Tastyworks, and they have a really cool. It's easy to set up like multi-leg trades if you're doing spreads and that kind of stuff. But their charting, I couldn't even tell you how to chart on their software. Tom, within the group, Tom, the leader, has a little bit more experience to that, and he's frustrated with it. And now they keep making changes to their tool. Now, Tasty Trade has a good phone app, although I don't use any of them. It's too hard on my eyes, so I seldom trade from phone. But I really like the E-Trades interfaces. And once you kind of get used to it, it's hard to sit and say, yep, tomorrow morning, I'm going to come in and completely switch everything I do. So,
Yeah,
but the neat thing about Toss, which I kind of wish I had, is the back testing, because I'd love to be able to run some of the ideas like that I use for my trend lines and stuff, and see and begin to understand what I'm missing in my own trades to tighten up my losses.
So what do you chart with?
I chart with the tools within eTrades Pro. I think they call it, give me 1 second, and I will tell you exactly what it's called. I chart during the day because it's live and I can trade from it as well at the same time, although I don't usually. I chart from eTrade Pro, that's their application. And then they have the web-based one, which is something Pro also, something eTrade, but it's not Pro. There's a slight difference in their naming conventions. But those are the two tools I use. And then lately I've subscribed and I'm using FinViz. I use those a lot at night when we're just doing some research. FinViz has been really good for research for me lately. Obviously, the GE trade, that one actually came from, didn't come from FinViz. That actually came from E-Trade. I have on my main page, I have a scanner of 52-week highs in regular stocks, and then I also have one for stocks trading under 20. And GE popped up actually in the other one and not the stocks under 20, because GE is an old stock and it doesn't qualify as being a penny stock. And even though they're only $6 or $7. And when they showed up twice in a couple of minutes, it wasn't even a question of going back and charting them. It was looking for the closest in the money play because they were dirt cheap. And I hold a couple hundred shares of GE. And the news basically that broke on them is that their free cash flow was going to be positive for the first time in several years, I think it is, starting next quarter or the end of the quarter after that. It was great news, and of course it was riding fairly high on that. I don't know exactly what happened today. I'm still profitable with one of the trades. I think that today is just an anomaly based on the entire day.
So I know you have your business right now, but can you see yourself doing this full time?
My business is part-time. Ever since I've gotten involved with the alphas, I'm on, all day long. I actually now, if you call here, it says that I'm on a long-term project. I'm still in the office. Please leave a message so I can prioritize my calls, because my system texts me. And, some of my customers aren't that happy with me, but I don't plan to stay doing this once I find my rhythm trading. At least that's the intent. So for all due purposes, I'm pretty darn close. I mean, I'm here on the Discord from 7, 8 o'clock our time till 10 o'clock our time a lot of nights. So I'm pretty committed.
Awesome. So what made you join / stay with Trading Alphas?
There isn't an issue of stay or not stay. I mean, the join part's real easy. It's a family story, so to speak. But leader Nick, was the one who brought me in, and that's because he knows my son out in Colorado. They used to work at the same company when they were working at one point, or nearby each other. I don't know exactly their relationship, but Nick kept trying to convince my son to get involved, and eventually I got involved instead. And so I came in as, Nick was the person who brought me in. My conversations shortly after I got here with Adam, and back then Dom as well, are parts of the reasons why I really wanted to be active with the team of alphas, was because of them. And it wasn't a talk about stock trading or anything like that. It was just heart to heart who we were and some things that we shared, in conversation, especially with Dom. I had some really good conversations with him. And
Not me.
Unless the Discord disbands, at least right now, I plan to be here until my dying breath, or the Discord disbanding. That would be the only thing that would change it.
That touched my heart.
I'm
Thanks.
crying. I like how you didn't include me in
I was
there.
being serious.
No.
Well, don't get me wrong. I'm not trying to ignore anybody.
I know. Yeah.
I mean, I've had, great conversations with everybody. Unfortunately, we've lost a couple of leaders too that I liked, and things happen. People move on. But ultimately, that was it. I mean, the big challenge was even getting me to spend money to become a member. I am a cheapskate. I will squeeze a turnip for every drop of blood I can get for one. And I say that jokingly, but I don't necessarily play some of the big plays because I treat my port every day like it's a small port.
Mhm. Nothing wrong with playing conservative.
It's not necessarily conservative because I've lost a lot of money playing what I've played,
Mhm.
but I'm trying to master um, finding those little nuggets that everybody can kind of get involved in because the risk is driven by how many contracts you take, not by the fact that each contract is 100 or 200 or $300 each. So if I find a good play, like for example, again, we'll use GE. The first group I bought was only 5 contracts. The one for the later out date that I'm carrying, I think I either have 10 or 20 contracts on it. So, but at 9-10 cents a contract, I can afford to play with that on a long swing, and they are long swing trades. They're not overnighters.
Mhm.
I got a
So do you,
coupon.
so do you have a routine for trading, like when you get up, or how does your day typically go?
Every day is a panic day. I just wake up in fear that something's gonna screw me over, and every day does. So don't get me wrong, it's normal. But in the morning, I go just on my phone just to see whether the overnights are red or green, and after that, I'm not too worried about it. Um, I I kind of follow my plays a little differently. I'm not worried about percentage of port all the time. I just look for which trades that I have a chance of pulling, in for decent money. Do I want to, trade them on? Do I want to move forward? Now that I'm doing a little bit more research, like I'm doing, I spend a little more time with FinViz, and I've always come in listening to like CNBC. I've got a Sirius radio, so I listen to what they're talking about. Like today, for example, and I left a tip out there to keep an eye on the energy sector because apparently the energy sector of all the sectors is the only one that did well this week. A good tip, and I think that goes in line with something that Clark was talking to the leaders about. So that's kind of the way it goes. As far as the morning goes, I try and because I sometimes have too many trades on, I put some trades on to sell some stuff if they hit, and I set a stop, not a stop, but I set a limit of looking for a specific amount of profit if it's a small trade. If I think there's going to be a runner, I kind of keep an eye on those. And that's, and other than that, I just do some basic research and just listen to see what's going on in the news and try and figure out how it might drive some of the options I'm playing.
So I know you do some more advanced strategies. Do you still like use spreads to reduce risk? Is that part of
Yeah,
your trading strategy?
no, I'm trying to figure out how to use them more actually a little bit. I'm not putting them on at this point yet, but I do have a couple running, and I had a weird issue with one of them today, so I took a big risk, and we'll see if it pays because the normal rule is on spreads you don't break them. And a couple of weeks ago, I broke one and I got burned because I didn't have enough profit on either leg, so I ended up losing money. A spread, you kind of know if it stays together, the maximum you're going to lose. The problem is one of the legs of my spread was at 99% gain. So I already made the maximum. So by taking off the negative side, the part that you don't control, which is the part you sold off, um, you don't have to worry about the call side because you control that. And so I took off the sell side on an Apple call. The problem with spreads though is you don't control the pricing as well. So I have on the flip side, I have an Apple call that's priced a little higher than it should be for where it's at. So I need a big run on Apple to make it even. But at the same time, I know right now if it went to zero and I couldn't sell the thing, I'm going to lose $126 total on the two legs. But yeah, I still use them. I don't do a lot of the iron condors and stuff like that. I'm still trying to figure them out. But like, for example, playing Tesla, I am using what they call a bull a bull put spread, which is taking a credit on the put side, which means that you're actually favoring the stock to go up, which is kind of weird thinking because most people think of put as a negative play.
Right.
And in this case, it's a positive play on Tesla. But it allows me to play closer to the money, although if you play too close, it's like flying. It's like playing with fire. If you play too close, you can get burned because Tesla could easily swing through both of them, and you're going to lose your max. But again, you know how much you're going to lose. You also know how much you're going to win, and it limits it greatly by the amount of the spread between the legs.
Awesome. So if anyone has questions about those strategies, Steve's your man.
Thanks.
So last question I have here, what's the best advice that you have to new traders?
Um, don't necessarily play like rigs. No. You got to learn. The first thing is you got to learn your risk. If you're coming in as a new trader, and let's just say you've already allocated yourself $10,000, put 9,000 away. Put it into an ETF. Put it into something that's going to earn money in the account, but you really can't touch it on a daily basis. This way, you have it if you need it, because you can sell ETFs just like you do stocks. Get money out, and at the same time, if you pick your ETFs right, they'll go up and down. So anytime you got free cash that you're not sure what to do with, either pull it out and put it into another account, or put it into something that you're not going to break up just because it's there. And trade with the smaller portion of your port. Because if you think you've got all the money in the world, you'll do something like I did, thinking that I had a Microsoft play, and this was a small port that I was doing in May. I went from $500, which is what I started it at, down to $250, back up to $1,500, which was a good move. This is only over 2 weeks. And then I got into a Microsoft play, and I think I'm pretty smart when it comes to where Microsoft is going. So I bought a couple of shares at, a couple of options rather, at a little bit higher than I probably should have. So as it came down, you sometimes hear people talk about, buying it to reduce their cost, which is not always the best advice for options. But I went ahead and bought 3 or 4 more contracts, and the stock didn't move. In fact, it moved slightly down. And basically my $1,500 port, although I took a little bit of cash out of it anyway, but before that, what was left of my $1,500 port went down to probably around $495. And then from there, I couldn't come up with a winning trade for the life of me, and I blew the port out. It's got $6 in it right now.
That's a big learning opportunity for sure.
Yep, it was. So my advice is even if you think you've got the money, just know your risk, set your limits, and especially if you're really new to it, because you're going to have one of those wins. Like you could have gotten in my GE trade, and you could have gone full port. Let's say if you had a $500 one, and you would have made a nice win. There's no question about it. But the next time you do it, let's say it's on a call on NVIDIA, which we play fairly regularly, and I seem to always be on the wrong end of that one. But you could buy 5 or 6 contracts at the price that we sometimes buy those at, and that would pretty much wipe out your port if you lose.
Very true.
So,
Position sizing is a big one.
Right. And to borrow a couple of things from Royal, who is in with us in the morning a lot, take your profit when there's a profit to be taken, and you think you've gotten to a certain point. My suggestion here is, because Royal sets like a 20 to 30% profit, and sometimes that's low because you know that the thing's going to move, or at least you believe it's going to be. We never know for sure. So what I've been doing, and this is the big thing, is I make sure that I buy at least 2 contracts or more when I can. This way I can take off either some profit, or ultimately, if it's a real good runner, I look to take off 1 or 2 contracts to equal the total amount that I got involved plus some profit. And this way I can let the runners go.
Yep, let them ride.
Yeah.
So I actually have one more question for you. Smiley asked, why is your name E2 Steve Computers?
It used to be E2 Computers in parentheses Steve, and it's a branding thing. I'm really, trying to be sensitive to my brand, and my mail that I use for my account is tied to it. And I wanted my name to match in case I was doing anything out there, because my search for my native part of my company brand is pretty good. And so I had planned, when I was marketing, and I do every now and then market for the Discord on one of my E2 sites, either in Facebook or my actual one of my actual websites. So I keep my company name in there. Just, it's a personal thing. Ego.
All right, I'd like to end on one final thing. More
Battery
chop,
Day Tesla Tuesday.
that as well. I don't know if everyone's holding Tesla,
Damn right I
but
am.
be careful, everyone. And I've preached this last week, but we're still choppy. Things are kind of looking on the bearish side, even though there's no catalyst. So maybe just a slight pullback. But yep, reduce position sizing when you can and play light. Those are my words of advice. But that concludes our market recap. If y'all have any further questions, please feel free to drop them. I will answer them. If not, everyone have a great weekend. Catch up on some rest, do some studying, spend time with family and friends, and be safe out there.